All right, everyone, welcome back for the analysis session. All right, I had my trade session earlier today. Hopefully, some of you saw that. If you haven't, you can go back on my channel and watch the stream. We had a nice 50-point profit on the MNQ, which was nice to see, and it took about 40 minutes. And the whole setup came along, and it was great. It worked out nice. So I put my account back into the green, and we'll see where we go from there. But there was a very important learning lesson in that stream, and that was about the filter that I used for the Trade Scanner Pro, which really helps out a lot. Now, I almost got stopped out of that trade, but even if I had gotten stopped out, there were still two more opportunities to enter that trade. That was worth, and it was worth a lot more than 50 points when the thing just kept going. Anyway, check out that stream. It's a great learning session. All right, so in this session, of course, as you know, we do the analysis, and I'm going to start with Bitcoin because every Sunday I publish my analysis on TradingView. Hopefully you read that, and I like to update that here. So the way this works is the first thing I do is we talk about the economic calendar. So we're aware of any important economic events for the week. Secondly, we talk about a few charts. We'll begin with Bitcoin. Hey, Hussein. Great. Round two for Hussein. He comes for the first session and he can't get enough. Nice to see you again. So after the economic calendar, we're going to run through some charts here, update my Bitcoin analysis, talk about a few things. And I mean, today we're going to talk about Bitcoin's next move because it looks like it's in progress right now and what this move can lead to and how to manage risk around this move so that you have some sort of perspective for your own trade strategies, whether you're a day trader, a swing trader, or investor. That's the whole point of this, is to give you some perspective around the price action so you're better prepared for the risks. And then after that, what we'll do is we'll use the Trade Scanner Pro to see if there are any secondary or third entries for some of the markets that we're interested. So if there's a market you'd like me to check for the Trade Scanner Pro, just let me know in the chat and we can do that. All right, so let's move along here, and let's first begin with the economic calendar. Now, sometimes I like to just rattle off a few things that I see on the calendar. Other times I just like to ask you to see if you're paying attention. So I'm going to ask you today, what do you think is important this week on the economic calendar? So I would recommend you guys check the economic calendar right now and give me a couple of items that you think on there are relevant. Because one of the problems with these economic calendars is they put everything on them. Every single little detailed event is on the economic calendar. And some economic calendars, they'll add some sort of relevance, meaning this event is more important than that event, right? They'll do that. But even then, when you filter your calendar for only the most important events, even those events, I would say more than 80% of the stuff on there is not relevant. It's not that important for intraday price action, especially. So we want to filter out to only the most important events that can really move markets in a significant way. What do you think those are this week? Anyone want to chime in? You can put that in the chat and I'll wait. All right. So while you're putting that in the chat, I'll remove these moving averages here from my Bitcoin chart because we don't need them. All right, they can serve as a filter. CPI, Howard says. Hey, Howard. Okay, what time does that come out, Howard? And that's a good one. Anything else? Is that all we have this week, CPI? Anything else of relevance this week? And it's okay. Look, if you're not sure, you can write, I don't know. But anything else? Let me know. And by the way, if you're watching me on Twitter, do me a favor and retweet the stream if you can. That would be helpful. Actually, not really. It doesn't matter. You know, my numbers, these streams are completely useless for me. So I'm trying to come out with a better workflow. I've been talking about this for a while. Hussein's must have heard this a billion times. Okay, but I'm working on it though. I'm working on improvements so that I can make this worth my time. 2:30, 2:30, 2:30. That must be European time. Central European time, I would imagine, or because you're definitely, Howard, you must not be in the US because CPI is an 8:30 a.m. Eastern time number typically, and that's important to know. So that's on, what is that, on Wednesday, the CPI report? I believe it's Wednesday, right? Yeah, Wednesday. You wrote it here. So Wednesday, that's probably the most important report this week is the CPI report. Now, when you're checking your calendars, right? Core inflation rate, month over month, 8:30. When is that? When is that? And what country is that, for the US? So here's a couple of tips. Yeah, I figured that. Okay. So here are a couple of tips with the economic calendar. The most important events are US events. Sorry, but they are, okay? Because we're still the US, we're still with the world reserve currency. So any US economic number that's coming out usually carries more weight than everything else. But of the US numbers, the most important are things like CPI, core CPE, FOMC meetings, non-farm payrolls. It's the same stuff every month. Usually, sometimes ISM manufacturing. Okay, okay, cool, Hussein. PPI, okay, PPI on Thursday, 8:30 also. Okay, that's usually what I like to think of as second tier. That's not a, we'll say the first tier numbers are CPI, no question. That's an inflationary measure. The Fed uses it. Also, core PCE is something that the Fed uses, so that's why everyone makes a big deal. FOMC meetings, non-farm payrolls, major company reports. Those are like tier one news events, and they can move the market in a major way. Tier two would be something like PPI, those type of things. The producer price index, Michigan consumer sentiment. Sometimes these things, if there's any kind of surprises, FOMC meeting minutes, they can move the markets in some way if there is some sort of surprise, something unexpected. But typically, those are second tier numbers. They don't move the markets in a major way. And what's moving are actually the dollar and the bonds. That's where it all begins, the dollar and the bonds. And there's been a lot of talk of the dollar and the bonds, it's a lot in the news. Everyone keeps saying the bond market is in trouble and blah, 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 blah. Right? We'll take a look at the bond market again. But every time I look, I don't know, it looks the same to me. So I don't know all this trouble. I understand that the bond market is not in a good situation. And I understand, the deficit. Like, I understand we have problems. But the bond market doesn't seem to be doing anything unusual yet. So anyway, all right, we'll take a look at that. Michigan consumer sentiment. All right, there you go, Hussein. So 10 o'clock on Friday. You see? So this is why we talk about some of these numbers, because it puts them into perspective. I know it doesn't make you money right away, but there are techniques that you could use to trade around events if you want to be more aggressive. There are things you can do, especially around things like CPI or FOMC or non-farm payrolls, because there's typically a spike at that number, and you can take positions on both sides and try to take advantage of that spike. It doesn't always work out because sometimes it may spike, get you in, and then stop you out. That can happen, right? But there is a strategy to event trades. All right. So anyway, so we got the economic calendar out of the way. Make sure that you check these tier one events and what time these things come out so you're prepared. It's important if you have trades going into it. Maybe you want to take profit off the table. Maybe you want to mitigate risk. Maybe you want to reduce positions, that type of stuff, right? That's why you want to be aware of these things so that if something unexpected comes along, you're not, your risk has been controlled. Now, of course, the market may go your way, but there's no way to know this in advance. That's why it's better to focus on risk and keeping your risk at a comfortable level for you. Now, all right, that's the economic calendar. Thanks, guys, for helping me out with that. Let's move along to Bitcoin, shall we? And we'll start our chart analysis now. So I'm going to make this chart bigger. This is my daily time frame here. And this is the chart that I put on TradingView. Now, in my article that I wrote, that I published yesterday, I talked about two scenarios. I said we could have the breakout above that 106 and the market may go straight, and it looks like that's what we got. I said that was a lower probability because I said that you could get the fake out, and the fake out was scenario 2, which was the higher probability. Now I wrote either way you can go long, right? The title was fake out or breakout is a long, is a buy, because this market's strong, and there's no question, right? That's why nothing about shorts. If we broke out, like taking this breakout was really going to depend on like how you manage this, what type of time frame you trade. This would make more sense as a day trader or a swing trader, not an investor, right? So if you were going to take this breakout on, let's say, a swing trade, right, you'd be watching the 4-hour time frame or 1-hour time frame. That's primarily what you would be watching. And look what occurred if you were watching this. This is the 4-hour. Let's go to a 1-hour, because this is really what you'd be dealing with if you were working on the smaller time frame after listening or considering my analysis. I talked about breaking out, right? So the breakout situation, that was this over here, right? We pushed 106.4. This was like the initial attempt, right? Then it pulled back. And this is probably when I wrote the article, probably around here somewhere. Or maybe it was around here. Let's see. Sunday. Okay, no, I published my article. It was right around these candles right here. This is when I published the article. So if you read the article and you're like, okay, I'm looking for a possible breakout. And look, this is your breakout. So if you're a breakout trader, that was a valid attempt. That was a valid attempt. Of course, we could say this after the fact, but here's the key. If you take such a trade, let's say you're taking it on the hourly chart, what you want to see after a breakout, because again, if this thing continued, there was a likelihood that this thing was going to squeeze because there are really not too many signs of weakness anywhere. And I talked about the pullback to 102, which we got, right? The week before I talked about that. That's why I left the illustration on my chart. And this thing has been producing nothing but higher lows. So when you get the breakout like that, what you don't want to see is the next candle giving it all back, right? That's what you don't want to see on this time frame. And that's where you'd have to make an adjustment, get out, take the loss or whatever. But if it follows through, which is what you got, okay, you get the breakout candle, next candle, it tried to pull back a bit, but it closed green, next candle broke the high. That's it. Okay, that's it. Your breakout is likely to follow through at that point. And then you can trail your stop. There's a few things you could do. The Trade Scanner Pro can help in that area as well, probably on a smaller time frame than this. But now this thing's on its way. So look, even though you got pin bars over here, doesn't matter. Blew right through them. And it's just going higher. Okay, no problem. So that was the breakout. But the whole key to the breakout, like I said, is when you get the breakout candle, how does the candle react after the breakout? You have to sit there and watch it. So that's not for everyone. But that's the breakout scenario. And I said that was a possibility. I figured it was a lower probability because whenever I see highs and I see resistance, usually you get the fake out. Okay, that's more common, right? Like over here, when I was anticipating this, right? You got the fake out. There was a bear flag in there. You got the fake out. And this was, I want to point this out as well. All right, so wait, first, before I point that out, my second scenario was if we got the fake out, big if. So that hourly candle, for example, would have been a big red candle. You'd see a pin bar on this time frame, right? And a break basically below this low over here. That would have pointed to the second scenario. The market would be suggesting at that point it wants to follow the second scenario. Remember, it's not what I think. I have no idea what the market's going to do. No clue. But I have an idea of some potential possibilities, but the market needs to confirm. The market needs to say, yeah, I agree with that, or no, I don't agree with that. So the market would have been saying it agreed with the pullback scenario if we broke that previous low at, what is that, 105, basically 105 even. And then I'd be looking for the 104 test, something like that. And this would have been your high probability reversal. And that would have been an inverted head and shoulders. Again, it'd be a shoulder, right? This is your head over here. And then this would have been your shoulder over here. I don't put a lot of weight on those patterns. It's just, I think a lot of retail traders do, and they all pile in. You don't want to be one of those. What you want to be focused on more is this structure right here and this confirmation right here, not the inverted head and shoulders. By the time the retail herd jumps in, they're buying it at much worse prices because they waited for too much confirmation, right? And those are the people you want to sell to. But anyway, we never got that scenario, so it doesn't mean anything now. I just want to point out This is why you have to consider multiple scenarios and let the market confirm. I thought maybe there was the possibility that we reject over here because we had some resistance going back a bit, right? Minor resistance. We blew right through it. Now, the week before, let's just talk about that for a moment. The week before, I was pointing out a bear flag situation over here. It was a little tricky, but eventually the market gave us a pin bar. We broke the bottom of it and we retested the 102 area. How low was the low here? 103.77. I wrote, if you look at the week before, 102.5 to 100 area, something like that. So I talked about this zone and I said, this is where you would be looking for reversals to go long. Let's take a quick look at the 4-hour chart. How is that? How that played out on the 4-hour chart? Look here. What is that? Okay, this is exactly what you'd be waiting for at that location. And it came. You have to wait for it, but it came. And that was a nice clean entry, right? The low of that candle is the 101. Yeah, the 103.77. The high of the candle is 102.185. That was the support zone. I called it way before it went there. So again, do I know these things in advance? Do I have some kind of, magical blah, blah, blah? No, I don't. I just know levels and I assign probabilities to levels, and then I consider a scenario. And once you have the scenario considered, then it's up to the market from there. Either the market confirms it or the market rejects it. And then if the market confirms it, you measure your risk. If you're okay with that risk, you could take a position. If the risk is too big, let's say in the 4-hour time frame, like, it's too much risk for me. Then you go to a smaller time frame and you find something there, because if you can't handle a lot of risk, or you lower your size, right? You have to make one of those choices. If you don't have this type of structured thinking, you're not going to get anywhere. I'm just telling you right now, you're basically, your results are going to be all over the place. You're going to get caught in something and you're going to wipe out your account. That's how it goes. All right. So I'm just being very straight with you. So let's see. Okay, cool. So you guys follow me so far? So what about Bitcoin from now on? I just reviewed what Bitcoin has done, and I reviewed it in terms of the analysis that I published. But what about now? What's Bitcoin's next move? Well, as you can see right now, this thing is not pulling back. This is a bad idea for a short, no question. I would not short this. I don't short Bitcoin, as you guys know, that on these time frames. As if a day trader, if I'm looking at like perp futures, sure, I'll short a 1-minute chart, no problem. But no swing trades and certainly no position trades on the short side. Now, as you can see, there's no weakness whatsoever. Where we are now at what, 108, 650 basically, or whatever. Now, is this a place for a long? Not on this time frame either. On smaller time frames, on a 1-minute, fine, no problem. On a 1-minute, this is a nice big bullish candle. I would be looking for follow through in momentum, and I would just look for support and resistance levels on smaller time frames if you're going to work on a 1-minute chart. You'll find that simply by going to a smaller time frame. For example, like a 15-minute. You find your support and resistance levels on this time frame. Look, there's an old resistance right there. That's your support. That's it. It's that simple. There's a pin bar developing right now. Bad place to go long right now. This would be an aggressive short if the pin bar low breaks. Aggressive short because you're fighting the general trend. But if you're looking for a small bite, okay, no problem. But you have to be more advanced to do that. If you're like new and you're like, oh yeah, sure, you're going to have problems. Just don't do it. Just wait for the higher probability, which would be pull back to support, look for reversal. It's that simple, right? That's what you would do if you're going to work the smaller time frame. The larger time frames, like look, the 4-hour, there's just nothing to do here. It's vertical. Let it do its thing. So the main question is, okay, so what's the next move? At this moment, it looks like it wants to extend. So we have to look at potential resistance levels, right? What type of price objective can this reach? 10K, a 110 is very doable, right? That's only like 1,500 points away. And look, we're going back to the 113K resistance. That resistance has been on my chart for months, that 113K. And we rejected here. We went to 112 and rejected, and we had a corrective pattern there, a brief corrective pattern. But this is an impulse pattern. We're back on the side of the trend, which means this is not likely the fifth wave then, right? That's the tricky thing with wave fives is this looks like we're going to get, if we get the higher high, then I got to move these numbers here, right? That's why I leave question marks here because I don't know if this is the fifth wave. It's possible that it's the fifth of the fifth, but if it's not, we get this, right? That's what calls for relabeling. That's why you don't get married to wave counts. You shouldn't get married to some women either, but wave counts especially, you don't marry them. You be prepared to adjust because if this thing makes that higher high and blows through 113, then the next move beyond that is 120. That's my next major resistance area. Do I have a line? I don't have a line up there. But 120 is like my next major resistance area. That comes from measuring, like going back to like a weekly chart, right? Doing stuff like this, going back and doing some projections from here. Now, I mean, look where we are. That that little corrective move that we saw over the previous week or whatever. I mean, look, let's just extend this. In fact, Hussein was asking about this earlier today, what I thought of the weekly chart. And I was explaining to him, I don't like the location for investing. It's horrible. But just look at this. Look what's happening here, right? Look, pin bar broke above the pin bar high. That's a long signal. It's a low probability long signal. I would not take that long on this time frame. I just wouldn't do it. But um, it's likely to make the higher high. Now, just look at the wave count here. If this is the fifth of the fifth wave, then maybe my wave 4 was mislabeled. Maybe this is the bottom of the wave 4. That makes sense. And then maybe we're looking at the fifth of the fifth wave. That could be the case, right? That's the type of adjusting you have to do. So what does this mean? If you're a day trader, you're looking for longs. You're still working on the long side. That means you're anticipating supports to hold, even if they're minor supports. You're looking for long signals. You're looking for reversals. You're looking for confirmations. You're looking for double bottoms and after pullbacks. You're looking for failed lows into support levels, even if they're minor supports. You're looking for reversal patterns to go long. That's all in line with this, right? And when you're working with day trades, you don't even look at this picture. You don't need the weekly chart. You can work with an hourly. As you see, when I do my streams, I'm working on a 30-second and a 1-minute chart. That may be hard for some people. You can work on a 5-minute. You can work on a 15-minute. There's plenty of opportunities, but things change much more frequently in those time frames. Maybe you want to work on a 30-minute. My point is, the long side still makes sense for smaller time frame strategies, but bigger picture, I'll go back to a 4-hour chart. Bigger picture, now risk, the higher this thing goes, like we start pushing 110, beyond 110 into like the 112 area, risk becomes elevated. And this is especially what's most notable here is this is where you don't want to invest. Now, like even if you're taking small bites, there's just no point. There's just no point. Like if you were looking to take small bites, you should have taken a small bite when it was pulling back. That's it, right? And the thing is with these pullbacks, you don't know where that bottom is going to be. That bottom could have been 95. But the lower it goes on a pullback like that, the more compelled you should be. But if you know the wave counts or have some idea of the wave counts, like for example, if this is our wave 4, right? So if this consolidation is not wave 4, right? This consolidation that I have here labeled as wave 4, if this is wave 4 instead, and we're in the fifth wave, once you count 5 waves here, that's it. You don't want to buy the pullback after that. You don't want to, if you're going to buy the pullback, wait for a steep pullback, right? Which theoretically should go lower than this low right here. So that tells you, that gives you you're much better prepared if you know this. Like, oh, if we're in 5 waves and this thing pulls back, then I'm not buying a pullback because usually the 5th wave means the party's over. So you're more likely to see a steeper correction or a longer corrective type of move. We see it over and over again. It's a probability. It's not a guarantee. It's a probability, but at least you're better prepared. You can be more conservative. Maybe if you see a pullback, you say, okay, I normally would have gone bigger, but I'm going to go smaller because it's a lower probability that this thing can put a bounce together and rally to new highs. While all your friends are buying the pullback because, some moron told them to do it, you know better. And if the market does happen to stabilize there, you always have the opportunity to add more. But the key part is you managed your risk, because that's what's going to keep you in this game, is containing that risk. Not, oh, I missed out, I should have gotten all in, I would have had the best price, but I listened to that bald guy and now I'm making less money. I am so annoyed, right? If that's you, I can't help you, man. You'll find out. The market will teach you the hard way. So anyway, so that's my Bitcoin. That's my analysis for the next move. So 113. If you want to participate, consider smaller time frames. If smaller time frames are too hard for you, just step aside. You don't have to participate. Find something else. There are other markets. Maybe look at Ethereum. I mean, they're all most likely following Bitcoin, right? I wouldn't really mess with those altcoins. Let's take a look at Ethereum real quick. Right? What's Ethereum doing? Is it following? Does it look similar? It's similar. It's not as good. Let's look at the weekly chart on Ethereum. So as Bitcoin nears its highs, look, this Ethereum relatively should be like up here. It's not even. So Ethereum sucks. It's relatively weak. So if Bitcoin has that fifth wave, and this is the best Ethereum can do, then I wouldn't want to be in Ethereum, relatively speaking. So keep that in mind. And as for all these people who are blowing smoke up where with their altcoin nonsense, their altcoin season, I guess anything is possible. But again, look at it from a perspective of risk. Also, when it comes to altcoins, and let me know if you have any questions about Bitcoin, but when it comes to altcoins, you have to think about, well, who drives altcoins? Is it really institutional investors? Maybe some of them, some of the altcoins, but who generally drives the altcoins? Retail. And if retail is poor, you're not going to have an altcoin season unless I don't know where it's going to come from, right? Does that make sense? So where does retail get their money from? Interest rates. So let's go to the bonds, because I keep seeing all this drama about the bond. The bond market. Banks are going to fail. Let's take a look at what's happening here, because this chart here, this is reality. 10-year note. You don't have to be a renowned economist to read this. I don't care what they say about tariff this and tariff that and all this other nonsense. They're just all there doing the same thing, trying to make money with your attention. They don't really care about what they say. It's just say anything. Who cares? As long as I have your attention. That's the game they play, right? Let's really take a look at the bond market, because if the bond market is not cooperating, or if I think the bond market, if anything is going to tell us about altcoin season, I think it's the bond market. I could be wrong, and I've been wrong about this before, but this is where I like to look, because I was also right about this one time. So maybe it's all coincidence. This is the 10-year note. This is inverse to yields. So this means if this goes lower, interest rates go higher. If this goes higher, interest rates go lower. We need interest rates to go lower. If interest rates go lower, we could take a look. Look, US 10Y. This is the yield. This is the interest rates. This is what affects retail traders, regular people, because all of our borrowing is tied to this. So, yes, we zoom out a bit. This is a weekly chart we're looking at. We have a consolidation here, no question. It's a higher low consolidation, no question. It's poised to go higher. Yes, I agree with that. It's poised to do this. But what's going to be the catalyst for that? The Fed, right? The Fed's supposed to cut rates this month. Okay. So if they cut rates, then this is supposed to go lower, right? Because that's the whole goal of the Fed, or at least cutting rates. This is the rate. They cut the short-term rate, and this is supposed to be affected by that, right? But on its own, because it trades in a free market, theoretically, on its own, rates are rising. Why do rates rise? Because people don't have faith in the US government paying back their bonds. So if you don't have faith in the US government paying back, you want a higher interest rate because you want to be compensated for your risk. That's why rates rise, because people want higher yields if they suspect or they fear that the US government's not going to pay back. But as they say, the government will just print it and pay you with that. So we could get into debates about all that stuff. Um, just tuning. Hey, Kev. Okay, no problem. So yeah, quick recap. Bitcoin is at this point likely to push 110 to 113, and I believe it's still a long on the smaller time frames. But anything higher, like swing trades or especially position trades, I think Bitcoin is you're looking at elevated risk again, right? But if it breaks out, 120 is a possibility. That's pretty much the recap. And I would, just to keep risk mitigated, I would work on smaller time frames to participate in that, or not at all, because you know how I am. I don't like these moves where it just goes higher and higher and higher and higher and higher and no pullbacks. That just, to me, is just risk keeps increasing, increasing, increasing. And so that's the recap for that. That's Bitcoin's next move. So 113, 120. And now I'm looking at, I looked at Ethereum. Ethereum sucks, so it's relatively weak, right? If Bitcoin makes a move, maybe Ethereum tries to follow along, but I don't know. It seems like all the money is just concentrated into certain things. Everyone talks about the Magnificent Seven. I don't know who came up with that stupid term, but all the money is concentrated in just those stocks. So I don't know. I don't think that's a healthy thing, to be honest with you. But anyway, so bond market, right? Bond yields. I know this is boring. Bonds. So I was talking about bonds again. But my question is, where is altcoin season money going to come from? If retail is poor and rates keep rising, which means people can't borrow money, yet rates are rising and inflation is rising at the same time too. Rising rates is supposed to contain inflation, but that doesn't seem to be happening. So, I don't know. It's a very it's an unusual situation. But if rates keep rising, right, and we get some catalyst, maybe US bond ratings go to like B minus or something. I don't know, whatever, something, and we see a spike like that, we're going to start to see bank problems, right? Because remember, banks are long bonds. Spike here means bond prices are going into the toilet, is what that means. Now, they keep talking about this. I keep seeing people on YouTube talking about this over and over again, but I don't know. We're still in the middle of the range. We haven't changed in weeks. We're still in the same spot. So all this nonsense that they talk about on YouTube, I guess they just need the clicks. I don't know, but there's nothing happening here yet. I can understand there's potential for things to happen, but it's not there yet. The market needs to speak. It's not speaking. So there's nothing going on here. Anyway, that's the bond market. So my opinion, to see altcoin season, to really get it going, because remember, if you go back a couple of years, what was the driver behind altcoin season? Stimulus checks and zero interest rates from the Fed, right? So zero interest rates. What does that look like? Let's go back a few years here. Look at this. Zero interest rates. Look what rates are since then. This needs to change if the retail trader is going to have money. And trust me, I'm feeling it too. I think this is also a function of why my business, as far as like the Trade Scanner Pro, I make no money. People don't sign up, people cancel. Retail has no money. No one has money. So, you know, I think it squeezes the retail, it squeezes the regular guy, and because your money is worth less and less and less. And so we have this inflationary environment, but then you can't borrow any money because the interest rates are too high. So I don't know. I don't know where that leaves you. You know, to be fair, we all stare at charts and like markets. This crowd is interested in bonds. Okay. Oh no, I appreciate that, Kev. I appreciate that. You should be. I'm glad you are. You should be. But I know like your typical, Ferrari chaser, they don't want to hear about the bonds. But the game begins with the bonds. That's where everything begins. One valuable lesson I learned over the years is bigger picture, the game begins with the bonds. So it's always a good idea to just keep an eye. So, like I said, rates, if rates start going lower, right? These are the rates. If we start pushing these lows, that's generally good. That's an inflationary thing, but it's generally good for when you need to borrow money and stuff like that, right? So it kind of relieves the pressure on the little guy in that sense, but our money becomes more worthless faster. So I don't know which one breaks. Something's going to break. I don't know which one breaks first. I'm not an economist. Even the economists don't seem to know. So I don't know. Anyway, that's the bond market. Now let's jump around a bit. All right. If there's a market you guys want to see, let me know. Let's take a quick look. Now I know silver, people have been making a big deal out of silver. XAG, USD. Let's take a quick look at silver. Right? Look at silver. What are we at now? 36.70. And this is the weekly chart on silver. So we had a spike. We had a spike like a week ago, and people were all of a sudden more interested in silver. But this is the weekly chart on silver. I mean, silver has been lagging gold for quite some time, and theoretically, silver should be worth a lot more than it's worth. One report that I saw about silver. I mean, look at this. This is your support now. This old resistance, which is what, $26. We blew through this range high. I mean, just blew right through it, right? So we blew through the range high like this on silver. That's your next support, whether you're looking at silver futures, physical silver, whatever. But I mean, ideally, physical silver, you really want to see like the middle of the range. Something like that's a good place to go long. If you're looking to acquire silver and you want a better price, that's around the $31 area, possibly $30 area. That would be better than buying it now. Okay, in my opinion. These things don't typically run in straight lines. But so when it comes to something like this, silver. Now again, this is pretty steep on silver. Don't get fooled by all the nonsense. Yes, silver is the most conductive metal when it comes to electricity. And what do we need electricity for? All this Bitcoin production, all this blockchain, blah, 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 and these data centers and equipment. All right, silver is required for all of that electricity to be flowing through more efficiently and faster. Silver goes into solar panels. Silver. And silver has been undervalued. One thing that held silver back for quite some time, which I was unfamiliar with until recently, is there's also a big recycling process for silver. So a lot of silver gets recycled back into the market, and that's why silver gets held back, right? But now there's silver mines are not producing lots of silver, and now demand is growing for silver. So there are some fundamental arguments, but this is not technically where you want to get involved. Does that make sense? So this is very simple. You can go with your fundamental arguments. I mean, I agree with the bullish arguments on silver. I wouldn't be bearish on silver, but not at these prices. You can get better prices. Start here, or start here. Those are your prices for silver. All right. So 29, basically 30, and 33.79. You could round that to like 33.50. Makes sense? That's silver. So, and usually in these situations, bond rates are typically going lower, and the dollar is usually weakening when you see metals like this going higher. What's the dollar index doing? Quick look. And then we'll go to the Trade Scanner Pro. This doesn't look that pretty, does it? This is the US dollar index relative to other currencies, right? Look at this. We're at the range low. It tried to give us a failed low. It produced a lower high. I don't know. This one doesn't look good. Like something needs to, maybe this is what's getting everyone all excited, because this does not look good. Okay, this is the weekly chart on the dollar index. So maybe this is why everyone's all worried about why bond rates are rising. Usually, when bond rates rise, that's usually a positive for the currency, right? It should be a positive for the dollar because it costs more money now to borrow dollars. But bond rates are rising because of fears of not being able to pay back bonds in dollars. I don't know. there's a lot of conflicting information out there. So if you're not an economist like me, I like to just use the charts as my guide, because one thing that does not lie are prices. Prices don't lie. So if this breaks for whatever reason, there's a lower high. I mean, it's poised to break. If it does not break, we have another story. I mean, maybe we get another compound double bottom situation over here, possibly, but there's nothing there right now, right? Maybe we get that. Maybe it breaks this little high over here, and then the dollar is back in business. Maybe. I don't know. We can argue about fundamentals all day long, but the price has to prove itself either way. Make sense? All right. Now that's enough with like the broader view of things. Let's look around. Guys, if you have any symbols, anything you'd like me to take a look at, let's take a look around at, for example, let's go back to Bitcoin. How many people trade Bitcoin like on the short term here? Like how many people trade, whether it's futures or spot? Are you mostly invested, or are you more actively trade? Are you more active trader, like swing trades, for example? Maybe you don't day trade, but maybe you swing trade, right? What is it more of? Because I really don't have a sense of that from my viewers. You can put it in the channel. So here's what I want to do here. I want to turn the Trade Scanner Pro on. Let's make sure that when you're using the Trade Scanner Pro, you got to make sure these boxes are filled. And let's just look at some bigger picture stuff here. The trend is, I don't have to even do trend analysis. We know what that is. SPCE, okay. I swing trade BTC, maybe even longer term. Okay. Right. So I guess like swing trade or maybe a shorter term investor. Okay. So bigger picture Bitcoin would be of interest to you. So the idea is, what's the Trade Scanner Pro telling us? Is there anything? Well, there's nothing right now. There's nothing here. Not this is the weekly, right? So let's see. Is there anything on the daily time frame? Nothing here either, right? Nothing here. Although it's telling us that the trend is long. Okay, I don't need the Trade Scanner Pro to tell me that, right? I don't need the Trade Scanner Pro to tell me that. It's pretty clear. Let's go to a 4-hour time frame. Now, interestingly enough, the Trade Scanner Pro called Bitcoin long a few times. Look, this is the most recent time. On the 4-hour, called it long over here too. This one probably stopped out. Was it stopped out? Let's see. Yeah, this one was a $2,400 loss if you let it go back to the stop, which would have probably been over here. But look at this, right? This trade is closed, but a $3,400 profit, a 3,400 point profit on this one. And this, if you're using this thing, doesn't assume the trailing stop, right? So for example, watch this. This is what I mean. This is why you should be paying attention to the Trade Scanner Pro on larger time frames. Watch this. I'm going to play this back on the 4-hour time frame. This is not the purpose of what I want to do here. What I want to do is I want to see if there are any re-entry opportunities. But let's see what this looked like. Look, there is the signal. Okay, that was the 4-hour signal, and that occurred on Friday at 4 o'clock. Is that 4 o'clock? That's 4 a.m. I believe. Yeah, I believe that's 4 a.m. Yeah, that's 4 a.m. Eastern time. This candle right here. See that? All right. So look, how does this thing go? Now, as far as an example for reentry opportunities, let's just say you missed this entry because you're not up at 4 a.m. watching this. Let's just say, and you're not using your trading view notifications, right? Was there any reentry opportunities? Well, look, you got to pull back here. You have this little candle over here. At this moment, I don't know what, like, I know that this thing goes eventually higher, but the question is, can you use something like this? Well, it's pretty close to the blue line. It doesn't have to go below and come back above. You could use the high of this candle here if you want to be more aggressive, right? Let's see. What does it do? Oh, look, breaks the high. Okay, does it pull back again? Does it offer any other entry opportunities? Doesn't look like it does. All right, maybe there, but that now at this point, look how far away you are, right? At this point, although that's a nice signal, maybe on a smaller time frame, look at that nice high or low break like that. Not this time frame, it's too risky. You say, why? Well, look at the risk. This is your risk. And from up here, your risk would be this. 4,000 points. 4,000 point risk to make 1,600 points. That doesn't make sense. So you don't take that. Although it looks nice, nice pin bar. This would be something for a smaller time frame, perhaps a 5-minute chart, perhaps a 1 hour, maybe a 3-minute chart. This would be much more appropriate. Does that make sense? Because your risk is going to be much smaller, proportionally speaking. It's not going to be this, which is 4-hour risk. Each time frame has its own associated risk. And obviously, the larger the time frame, the greater the risk, right? So look, let's play this a little further. Does it go straight to the profit objective? Oh, it looks like, yeah, look, it blew through here. See that? And then it closed the trade. Can I go back and do that again? Let's see. Let's can I play that? And it just blows right through. It doesn't even, let's see. It just closes the trade out. Yeah, see, it just once it touches that profit objective, because that's the way when you're doing when you're doing it like this, yeah. But this theoretically, this trade is still open. Okay, this trade is still open. You see that, and you're just trailing it with the trailing stop. Make sense? So anyway, there was only one reentry there. Hey, nice to see you, WSQ. First time. Nice. Thanks for joining. I stream every other day, Monday, Wednesday, Friday at 9:30 a.m. Eastern time too. If you can't make it to that, well, you can watch the replay. Today we had a nice 50-point move in the NASDAQ futures. Anyway, so let's get to some of your symbols here that you guys want to see. So I see SPC. Okay, okay, no problem, Hussein. We take a look at that. Was there someone earlier? Let me see. I think no. All right, so let's take a look at SPC. And let's see if there are any re-entry signals. That's the whole idea. So we're looking at a stock now. Let's make this chart bigger. And a 4-hour chart is probably not the best choice because we need more data. So we could look at a 1-hour chart. I don't see anything here. These columns, by the way, like this blue, that's like the pre-market, I believe. No, that's the after. This is after hours. This is the pre-market over here, and then this is the market, the white, and then the blue again is the after hours. This is the pre-market, right, and the white is the open market. So let's see here. Well, all right. First, let's just get a sense of general trend on this thing. Let's start with the weekly time frame. We need to kind of get a sense of general trend. Okay, this thing sucks. General trend is bearish. Look at that. Not exactly great. Okay, so the general trend is not really bullish yet. That doesn't mean you have to be bearish intraday. Just kind of want to get a sense of, on the bigger picture, what should we anticipate from support and resistance levels, right? This tells me that bigger picture resistance levels are more likely to be respected. That's it. It doesn't guarantee that they will be, but they're likely to be. And if you see a sell signal off of a anticipated resistance, you should, if anything, you should not be going long there, if anything. All right. Now, so let's look at our 30-minute time frame. And let's see. All right. I don't really see, I see a bunch of shorts that weren't working. I don't see anything here. Let's take a look at a 5-minute. Remember, when you're working with the Trade Scanner Pro, it's okay to look at multiple time frames, but you have to have like a general idea though first, right? So we saw the bigger picture was generally bearish. Our smaller picture is not exactly bearish. Our smaller picture we can get from the 1-hour time frame, right? So that weekly pullback situation that I pointed out, that was back here, right? That lower high on the weekly, that was back here. Since then, this thing got hammered. Okay, no problem. But looks like we found some support and we pushed our first resistance recently, it looks like, right? We pushed our first resistance over here. Okay, so that could be a sign of a change, at least for short term. So if you're thinking about day trades or swing trades, it might be possible for short term. Now, we pushed the resistance. All right, let's just clearly identify the resistance. You have an old support over here, so that's a resistance, right? You briefly pushed above it, and you're kind of back in here. All right, you're still fooling around at a resistance, so I would not be in a hurry for longs on this thing, right? Now let's kind of look at this from the Trade Scanner Pro perspective. Oh, okay, because maybe they're considering this one as an alternative because all the drama. All right, that's interesting, but don't get too caught up in that hype nonsense. There's a reason why this company they don't make money or whatever their problem is. This stock is generally not a good stock. Generally, and we don't have to get caught up in fundamentals, but the structure is not there yet. This would be I would consider this more of like a GameStop type of situation, right? So let's so this is where the Trade Scanner Pro can help you, but you're going to have to work on a very small time frame, like a 5 minute, for example, right? The 5 minute structure is generally bullish. Look, it's trying to find longs, but what I'm not seeing here are any open trades with any re-entry opportunities, right? So this may have been the drama there, right? And then they're realizing this stock is not that special anyway. So the Trade Scanner Pro is still looking for longs. You're getting a heads up here for a long, maybe sometime today. Okay, let's look at a 15 minute. Anything? There's just no trades anywhere, right? There are no trades. We don't even have a heads up over here. How about a 30 minute? Nothing on a 30 minute. Hourly? Nothing. How about 4 hour? Nothing. How about 3 hour? Anything? No, this is all bearish. Look at that pin bar. That's not good. Right. So there's nothing here. There's really nothing to do here. So that's a nice thing about having, getting some perspective from the price structure and then using the Trade Scanner Pro to guide you along and simplify your decision making. That's how you use it in the bigger picture. What I'd be looking for, first of all, is after you've done your analysis, general analysis suggests that this thing is bearish, right? That's generally speaking, until it really clears this resistance. So it's probably better to look for shorts with the Trade Scanner Pro, not for longs. So realize if you do look for longs, it's going to be more aggressive. And if that's the idea you come up with, like you still want to go long anyway, then you should probably take smaller size because it's less likely to work out. What's more likely to work out is resistance sticks and this thing attempts to test the low. So that's what it seems like. Probability leans more in that favor. Resistance hold, support break. So I would be looking for shorts. Now that's where, after coming up with that idea, now you use a Trade Scanner Pro to confirm that idea, not the other way around. I know you guys know. Hussein hears me say that every day. So I'm not telling this to Hussein, but you do your analysis, right? And then you say, okay, I'm looking for resistances to hold. Now I want to find Trade Scanner Pro, confirm. And then to take it a step further, Trade Scanner Pro maybe confirms, but you don't take the initial trade. You wait for a re-entry. That's what helps to filter out a lot of these bad trades. You just have to know to do that. It's not intuitive. Make sense? Okay, so that's that one. For maybe buy bottom of range. Well, right. Well, you could try to, again, but here's the thing, Kev. The general trend on this is generally weak. I would suspect that these supports would break and a new low would be tested. So really, like, if you want to do that, if you want to try to look for the bottom on this thing, you really should look for a bottom extension, like something further, much lower, and find like a broader support, like an old resistance, like here, something like that, if you were going to play that game. And that would probably be more of an investor game. Like, you want to just invest in it and you want a decent price and hope it turns around, but you have to hope, you know, and maybe build a position if it starts to improve. But clearly, this company does not have good fundamentals. It's reflected in the chart, right? Investors are clearly not excited about this one. So anyway, that's the story there. But what I wanted to find was to see if we could find any examples of a trade that's open right now. Let's take a look at, I saw a trade that was called earlier on the bot. What was it? I'm trying to remember. I think it said to sell something. What was it? Was it Ethereum? I can't remember. I saw it pop up and I can't remember what trade that was. There was a trade. The Trade Scanner Pro calls trades every day based on the 4 hour time frame. And you don't take all the trades, but they could be good reference points for things. So, for example, let me see if I can find one. I don't think it was Ethereum, but let's just check. And let's just check. Let's go to the 4 hour time frame. Oh, maybe it was Ethereum. Or Ethereum was recent. Maybe it wasn't today. But okay, look, here's an example. this is an open trade, right? You could see the suggestions on the chart. This was called back here on Friday. I guess it was also called with the Bitcoin. Remember we had that Bitcoin long that I showed you? So it was called at the same time, okay? It was a long, look at that. Now, the long was called on this candle right here, this green candle, right? That's when this green candle closes, the long signal appears and you get this blue line. You can set up your TradingView notifications so you can get an email when that happens, right? Or you could be using the trade scanner bot and the bot will send you an email. Although no one likes the bot, there is some value in that thing. Anyway, so the question here is, if you're going to use the reentry filter that I described, would it have helped you here? The answer is yes. Look, there was a reentry here. Well, first of all, the reentry filter, you don't always have to wait for it to go back to the blue line. You could just wait for a buy signal after the entry, right? So a candle like this, pin bar type candle, after it gives you the signal. So you're buying the pullback, right? You're buying a buy signal after a pullback. Okay, but that might be more advanced. So maybe a newer trader won't know how to do that. Okay, no problem. So you wait for the blue line. If you waited for the blue line, right, a reentry, you re-entered there. Look, it gave you a hard time. There's some fooling around. So let's say this was like your area of fooling around. You'd have to take some pain, but nowhere near your stop. How much pain is this? 33 points, okay? 33 points compared to the full risk. The full risk is this, right? 108 points. So that's like 1/3 the risk that you're dealing with. But you have to, this is what you have to respect the stop. You have to have a stop. That's your risk. If you don't like the risk on this time frame, then you take smaller size or you don't trade this time frame. But that's one of the great things about the Trade Scanner Pro. It's always quantifying your risk, and it's not based on some irrelevant structure. It's based on price movement. So it's always going to be unique to the market, not some arbitrary random number. So there was that reentry, which never got stopped out. We went back to the blue line, right? There were a couple of reentries here. If you're waiting, look at this blue line touch. This one worked beautifully. This never looked back. If you bought it at this time right here, it never looked back. It just went. You had this little red candle in here, right? Maybe you look at that candle. Remember, this is 4 hours apart. Okay, look at this. So let's say you miss. I missed it. You wait. You check 4 hours after. Oh, look at the bottom of this candle. You're gonna have to use a smaller time frame to refine that, but you still had a touch. There was a possibility there. And then look, break above. This would be. I mean, you could consider this too, but that's more aggressive because now you're moving away from the blue line. Now you're asking for trouble. You're taking more risk. The whole idea of the reentry method is to be at the blue line or below the blue line to take an entry, not above. Right? You don't want a worse price, you want a better price. And now look, since then it's just never looked back. Okay? So this trade right now, assuming you bought it at the blue line, or let's pick a fair price. Let's say you bought it back here. Okay? You bought it back here, and let's say you bought it at the top of the candle. All right? At this point, you're still up 67 points. You had to take some pain. It was a pain. It was annoying to watch. But if you held through and you used the Trade Scanner Pro as your guide, you're up 67 points. Right? And again, the risk was what? 109. So it's not worth your risk yet, but it's still in good shape. And that thing is, that's your max risk, right? Your trailing stop has reduced your risk basically to 85 points. So if you bought it here, 95 points now. So your risk has been reduced by 10 points, assuming you're going to respect the trailing stop. As the market fluctuates and continues to sit around or whatever, the trailing stop is going to move higher and higher as each candle closes. Now this is a 4-hour time frame, so you have to wait 4 hours. Every 4 hours, this trailing stop is going to pop up higher and higher and reduce your risk further and further. That's the beauty of this thing. people don't use this thing properly. But so my point is, with Ethereum, you had more than one entry. Just because the signal went off over here doesn't mean you've missed it on these time frames. Does that make sense? And I apply what I'm showing you here on 30-second time frames and 1-minute time frames. That's what I do each day at 9:30, well, every other day at 9:30 a.m. Eastern time. I demonstrate that. You could see it in real time. But this is how you would use it on a longer time frame. And you would simply go to your trading view notifications, okay? Look, you would just go here and you would set it up there, right? And you select the Trade Scanner Pro, and the Trade Scanner Pro will tell you when a new signal appears. It'll tell you if your stop is touched, if your trailing stop is touched. So at least you know a signal popped up, and maybe you don't get to it right away, but then you can just make some adjustments and say, okay, my signal popped up. Let's see the next candle. Look, and there'll be times with this filtering method that I'm describing, there are going to be times when it just does this, and you're going to miss it. These times right now in this environment are going to be rare. So even if you miss one, you're not going to be missing a whole bunch. What's going to happen more often in this environment is this jumbling around and getting you in at bad prices, right? That's going to happen more. So why not take advantage of the noise? That's how you do it. Okay, that's how you use the Trade Scanner Pro. Now I realize I made a mistake when I introduced the Trade Scanner Pro. And look, I'm not a UI guy. Like I don't know anything about software and how to build software that's optimal for the user. I was just happy we could build something, right? So I know I'm just ignorant that way. But what I've learned is to sell software these days, there can't be a learning curve. There just can't be a learning curve because people just don't have the attention span. So, but there's a learning curve for this. I can't change that, right? Because this is not a forecasting tool. So all I can do is support and come up with videos and show instruction so that you can use this tool effectively. I've been trying to do that, but it doesn't work. I mean, people just don't care. They just want something that prints money for them, and that's that, right? So that's all I could tell you. Not a good business to be in, business-wise. All right, so you guys have any questions? So do you see how that works on these larger time frames? If you want to try out the Trade Scanner Pro, try it out. But if you can't handle this, then don't try it out because you're just wasting everyone's time. It's like I don't even push it anymore because people just don't stick with it. And I need to come up with a better business model because if I had to depend on the Trade Scanner Pro, man, I'd be in trouble. That's all I could say. As a software business, it's definitely not a business I would recommend people get into. So anyway, any questions? I certainly, maybe you're thinking this guy needs like some business consulting advice. Yes, I do. So yeah, I'm definitely not one of those business gurus. Any questions about this? This is how you use it on the bigger picture. Let's take a look at something else here. Maybe was it? I saw something pop up today. I just don't know what it wasn't. Litecoin. Oh, maybe it was Dogecoin. Maybe it was Dogecoin. Let's see. Was it Dogecoin? Dogecoin. Dogecoin. No, it wasn't Dogecoin. I forget what market it was. Something popped up. Can't remember. Was it? I don't think it was Litecoin. Was it Litecoin? I don't. There's a signal there. I don't know if it was this. Okay, so again, as you guys know, we don't just jump into a signal just because a signal pops up, right? All right, so I'll do this one and I'll wrap it up. So so there's a signal. Okay, cool. Now let's backtrack and see, does this make sense? It's a short signal on Litecoin. Bitcoin and Ethereum have been pretty strong. Litecoin is generating a short signal. All right, let's start out with the weekly chart. Because remember, bigger picture, we want to kind of get a sense of the bigger picture first. This is range bound. Okay, there's no trend here. Pretty clear, no trend. All I see on Litecoin is a range low. I see we're in the middle right now, and I see a range high. That's it. Very simple. There's really no trend here on the weekly. Now, if we go to a 4-hour time frame, this is where the signal is. I mean, we can argue that there's a bearish structure here, but this is tricky because look, I mean, we have this, which seems to be the more dominant structure, and then we have this. Looks like a higher low to me. So it doesn't exactly, and not only is it a higher low, look at this compound double bottom, right? Look at this. So not only compound double bottom, but look at this higher low. Does that look, do those look like characteristics that you want to short into? I wouldn't. So this signal, I would ignore. I would ignore this signal. Okay? That's how I use a Trade Scanner Pro. So I backtracked and I want to see, does this short signal make sense? Not really. Not in the eyes of the bigger picture. Right? And if we want to argue about the smaller picture, okay, we can argue about it. But this right here, just this series of formations right here, is not a bearish signature. That's just not bearish. That's bullish. Failed low, higher low. Next leg should be higher high. Right? We know what bearish looks like. Bearish looks like, the S&P back in April. That was bearish, where it was just a straight line. This is not a straight line. This is a lot of fooling around, overlapping, consolidating, not ideal. Now, if you wanted to short something like this time frame wouldn't make sense. You go to a 1 minute, maybe. You go to a 5 minute, if not forget the 4 hour. So this signal is not in line with the general structure. So as you know, the general structure comes first. That's how you filter out the signal. But I suspect what beginners do is they just see the signal and they just jump in because they just want to see something and they don't want to do any work at all. It's not like the analysis that I do here is hard work. It takes literally a couple of minutes, not even, to figure out what side should I be working on. And if it's unclear, go find another market. It's very simple. Anyway, all right, you guys. So, all right, Howard, I'm going to wrap this up. But maybe was it Dot that popped out earlier? I don't know. All right, well we'll do that next time. So guys, you guys know I stream 3 days a week, Monday, Wednesday, Friday. So maybe if you can't make the stream at 9:30 a.m. Eastern time, then at least check it out, and maybe leave a comment or something on there if you like it or not. Each stream has a lesson. I know they're long. I have some ideas I'm working on, and I'll see if I can get that going to make the streams more optimal for viewing, and so that you can get the lesson out of them right away. But anyway, all right, you guys. So here, let me just switch this back. I don't see any questions. You guys know where to find me. If you want to send me an email or something, if you have a question about something, mark@markpremarkets.com. If you haven't seen me host the ICTC Trading Cup Challenge, there's a link in the description for that. It's free. I'm not selling anything. And if you want to try out the Trade Scanner Pro, you see the link up here. But make sure you cancel it within 14 days. Don't wait till day 15, get billed, and then send me an email. All right? All right, you guys. So again, I'll see you next time. Enjoy the rest of your day, the rest of the evening, wherever you're watching in the world. And thank you again for watching.